Hello and welcome. The day is the 8th of November 2017, and the day of the week is Wednesday. Welcome. My name is Derek. Everything you do within your own risk and your own reward. So let's cover BTC a little bit further. Basically, go over the three likely events in which to occur. I'm going to start off with a 2-day time frame as I have this trend line. Well, what it looked like before, or showing more data, would bring us something in this nature here. For you have the original resistance line in here that gets hit for time 2, 3, 4, 5, and on the 6th test it breaks it, and it's a valid break. What do I mean by valid? Well, I've seen several times before when a market breaks a resistance line like this. In fact, this is more common where it'll have a break maybe, but in here, or even here, you might see that it comes down and then start to show some sort of bearish mechanism. Maybe keeping the trend, but keyword, keeping the trend within its rate of ascent. But when you're bullish on something, what you're really hoping for is what happened. Yes, what happened. That is, it can break it and hold its statement. Statement, what's the statement? Well, the statement, when you break a key resistance level, especially ones that have been tested multiple times. I like 3, but I mean, the more the merrier, the more the better, I guess. Either way, the statement is, hello, yeah, about this rate of ascent, yeah, it's not working. What do you mean it's not working? Yeah, it's kind of weak. I kind of want to improve the such because, I mean, let's get real here for a second. We're in a situation where we've been running this trend for the better part now of about a couple years. And all it's done is go from about 300 to about 1500. I mean, we've only done 5 times in a matter of a couple years. That's just barely getting the job done. It's getting it done, but it's barely getting the job done. Because 300 times 10 is 3,000, and 300 times 5 times is 1,500. And that's where it broke. It's 1,500. Price action is 75. There's another 5x. Didn't take as long because the statement has always been, and is working, that when it broke this resistance, it needed to go up much higher. And we've had multiple hits now within this. And the exact same statement is true if this has that break. It doesn't change. Doesn't change. But what does change are the rates of ascent. Because when you can go from such that does a 5x in the span frame of about 25 or 26 months, that's pretty phenomenal. In the grand scheme of things, I guess it's pretty phenomenal. But what's even more phenomenal is if you could do 5x in about 6 months, or less than a quarter of that time it did before, because that has been what's up. So a break of this resistance means the rate of ascent, which is already spectacularly high, would be higher. And when I take a look at the 2-week chart going back to before 2012, a span of about 6 years. Wow, it's been that long. So the rate of ascent, I don't got the trend lines drawn in here, but I can do that. It's the original one taken out, the current one, being tested. Look at this trend line, rate of ascent. Not that much larger than the current one, which will be very interesting to see what kind of result would take place. Because once you have these parabolic moves, and the parabolic moves become greater, then there has to become a time where a play like this is involved. And overall, there's really two things I like to look for just by looking at a chart and indicating whether it might be toppy. One, significant volume. As we can see in here, significant volume. That means the volume has to come up here compared to here. So no, there isn't significant volume now. Number two, for the final bit of the gains to be huge. Let me give you an example. During this rally, it had a decent trend, broke this rate of resistance, and had a huge gain. This one has had these microscopic moves till that break a few months ago. And as again, we upgraded it. But I'm looking for candles this size near the top. I'm not looking for candles of this size towards the top. So the amount of types of interesting things that could occur within this break is, well, tough to grasp upon. In a situation of both of these breaks of resistance, it was, wow, this one here, 3 periods, 6 weeks, going from 125 to about 750 or so. It's about 5-6 times higher. 6 times, for 5 times 7,500 would be about 30,000. Could you imagine 30,000 in January? I mean, the webbot's not calling that. They're calling big things for not that big. And I'm not calling that. I'm just saying that, mathematically speaking, probability speaking, that such an event is much more likely now than it has been for quite some time. As rare as it is now, it's not as rare as it would have been in here because of the circumstances. So the two things that could happen, again, the sideways range or the correction. I'll be looking for a correction somewhere near this 18 average of highs, which is really the 18 average of lows on the weekly chart. But an interesting thing to point out is if there happens to be an extreme move to the upside, I would most certainly raising my pullback bias, because at this stage, if it does start to come down, and I think it's going to come down pretty good if it does, then we could probably end up going to here. But if this doesn't resist and we do have a move, probably at least to around this 10-11,000 mark, then I would think, ooh, if we go to, say we go to 12, I would think, well, maybe we might be able to make it back to about 7,000 or 8,000, but I won't be saying 5, although I won't rule that out. But the whole point is, when you keep on not resisting where you're supposed to get higher moves later after that. The corrections, when it finally does, will become bigger, but because the gains have been so large, the actual bottom where it should retrace would be higher. If the market goes from 1 to 2, then maybe it pulls back to $1.50. If a market goes from 1 to 5, then maybe it pulls back at 3. If it goes to 20, then maybe it pulls back at 7. If it goes to 100, then maybe it pulls back at about 20 or 25. And this would be an 80% reduction. But the whole point is, if you go up 100 times and fall 95%, that's just normal trading for extreme volatility, which the crypto space is doing a very good job at right now. Take care.